thank you to everybody who can join us today on this beautiful early autumn day. Again, I am Sarah Albrecht. I'm the Director of Media Marketing here at Simplicity Des Moines, joined of course by our Life Marketing Director, Al Stockwell, as well as Bill Ellis, who is hosting today from Mutual of Omaha and United of Omaha. We have got wonderful program. We've got some great products that we're going to go over, some great strategies, and just what a wonderful company Mutual of Omaha and United of Omaha is to work with. I'm not going to take up any more time. I'm just going to turn it over to Bill. And remember, if you have any questions, please hit the Q&A or the raise hand. Al and I will be facilitating and get to your questions as soon as we can. So take it away, Bill.
Thanks so much, Sarah. And welcome everybody to a quick little update from Mutual of Omaha. Thanks so much for taking a little time out of your day. I know we're all super busy. What I'd like to do is share a screen real quick and boom, hopefully you all are seeing my slides now. What we're going to do is an update on the Life Protection Advantage IUL product. This is the Mutual of Omaha Protection IUL product. And we recently extended the guarantee. Previously, we had a guaranteed age 85. We just extended it to age 90 and didn't change the price at all. So hopefully you guys are looking at that LPA IUL. It is priced to sell. Let's dive into it and see what we actually have on the shelf here. So if my clicker works, there we go. The LPA IUL, the Life Protection Advantage IUL, has 3 different indexing options as well as a fixed crediting option. So you can see the different options here. We have an uncapped that participates at 40%. Not seeing a whole lot of action on that, particularly since the participation has dropped down to 40% at this point. But the 100% option, we have an 8.5% cap on, which is actually pretty competitive in the protection IUL space. And then we also have a high participation option, which if any of your clients are ever going to take income out of the product, and look, with an 8.5% cap, you can get some income out of this thing. But if they're taking income, getting 140% of the S&P 500 is a very easy way to have positive arbitrage with the loan. And so I'll get into the specifics on the loan in a second. As I mentioned before, we just recently extended the guarantee by 5 years. So it went from age 85 to a guaranteed age 90, except if you're in my lovely state of California. Unfortunately, our Department of Insurance hasn't gotten around to approving it yet. So in California, the guarantee still runs to age 85, which is reflected accurately on WinFlex if you're running illustrations. So just remember, in California, still age 85, everywhere else age 90. So as you can see, we do have a fixed crediting option. We do have index and fixed loans on this product. Even though it's a protection product, you can still pull income out of it. And our index loans, we charge 4%. Which is obviously more of a play on the income side with our income advantage product, but very easy to get positive arbitrage when you only charge 4% on the loan, and a great place for your clients to move their money into that high participation option, that 140%, when they start taking money out, because very easy with 140% of the S&P to achieve something greater than 4% return. 2 of the most unique riders in the IUL space come on both of my fully underwritten IUL products. That's the guaranteed refund option, which you may be familiar with from the GUL days. We give your clients 7 different liquidity events in which they can get their money back guaranteed on an IUL product. That very much changes the downside conversation that you may have to have with your clients. And then a chronic and terminal illness rider that comes on all of my fully underwritten products free of charge with no underwriting, or the option of a true LTC rider. We're going to get into all of these different features here in a second. Let's go into the guaranteed refund option first. So as I mentioned, 7 different liquidity events. The first event at year 15 is only going to be 50%, but starting in year 20, 6 years in a row, your client can take back 100% of the premiums that they have paid into the policy. Now, you should take a look at the right side of the screen here. There are a couple of underwriting parameters that you have to meet in order to have the guaranteed refund option show up. On the LPA IUL, currently we cap the guaranteed refund option at age 60. So they have to be age 60 or less in order to get that guaranteed refund option. We should, in the next month or two, be extending that to age 65, which is going to be a huge deal for your Life Protection Advantage IUL clients. So hopefully before the end of the year, I will have more great news on this LPA IUL product, getting that guaranteed refund option out until age 65. That would be pretty cool. So, and that's, you know, starting age. And if you see it on the illustration, it's the fourth column over on the deck page. If you see it on the illustration, it's part of the policy. So just look for it when you're illustrating your clients' policies for them. Okay, chronic illness rider. So I mentioned this comes on the product free of charge with no underwriting at all ages and all risk classes. So you can see in all states except for California, this is what my chronic illness rider looks like. Goes up to $1 million or 80% of the face amount. That is a per policy cap, not a per insured cap. What do I mean by that? That means if you have a client who's very interested in the free of charge chronic illness rider, but wants to ramp up the coverage, say they're taking a $2 million policy down, but they want more than $1 million for chronic illness coverage, take two $1 million policies down. Why would you do that? Because then you get $800,000 on each $1 million policy for a total of $1.6 million. We don't charge you extra fees because there's only one policy fee, even though there's two separate policies because it's on the same insured. And we also have our last pricing band at $1 million. So as long as you're at $1 million up, it's going to be the same out-of-pocket expense to your client. You're just ratcheting up the amount of chronic illness coverage they can get because you know how to illustrate it correctly. Anyhow, I mentioned all ages, all risk classes, chronic illness rider included with no underwriting and no upfront cost. There is a back end discount on this rider. Reach out to Al and his team if you need any specifics on that. We do have a nice little 2-page PDF that walks you through the calculation. Very straightforward, very easy to understand. Okay, California. My chronic illness rider is different in California because my state is very special. Unfortunately, in California, we only have a $500,000 cap as opposed to $1 million. But again, you can ratchet up the coverage by stacking policies with Mutual of Omaha. The only other difference in California is that there is no acceleration limit. Everywhere else, we're going to allow you to do what the IRS deems tax-free, which bumps up a little bit roughly by inflation on an annual basis. In California, they wouldn't allow us to limit the policy. So your California clients can create a taxable event if they accelerate over what the IRS calls tax-free. They would need to work with the IRS on getting the any amount over that per diem tax-free. Anyhow, that is not tax advice. Please consult the appropriate advisors for tax advice. But again, the difference is $500,000 or 80% of the policy in California as opposed to $1 million everywhere else. Okay, on to my accelerated underwriting program. We have a great accelerated underwriting program, and you can run your IUL products through it. So on iGo, you can find the drop ticket for the LPA IUL. The only way to get into my accelerated underwriting program is to utilize the drop ticket on iGo. That is how you get in there. So the great news is we, during this global pandemic, have extended the face amounts and the ages that are acceptable into our accelerated underwriting program. So we go up to age 60 and up to $2 million at this point on the LPA IUL, on my Income Advantage IUL, and my Term Life Answers, which is my fully underwritten term. All three, they all have separate drop tickets. Use those drop tickets. If you're within the correct parameters, it will go through accelerated underwriting. Let's see. The client must connect with Exam One, who we outsource the interview with, within the first 5 business days. Otherwise, you get kicked into full underwriting. The great news is we do go off our published underwriting guidelines. So your client would never get a worse offer because they went through accelerated underwriting. And no random kickouts. I know that's news, great news to everybody's ears, but we don't do that 10% auditing kickout. So Mutual of Omaha, if your client gets kicked out, it's for a reason. Okay, long-term care rider. So I mentioned a chronic illness rider. That's automatically on my IUL policies, free of charge with no underwriting. If, however, the client would like a true long-term care rider, they have the option to do so with Mutual of Omaha everywhere except for California. Again, we've been waiting. Geez, I think we're in our 4th year of waiting for California to approve this thing, but they finally responded after 4 years. So we're hopeful that maybe this is our year, but we'll see. No promises, obviously. Anyhow, everywhere else, long-term care rider approved, ready to rock and roll. It's a true long-term care rider. So again, it is available on my Income Advantage IUL and the LPA IUL. It is a reimbursement rider. So my chronic illness rider is indemnity. So if you don't want to submit receipts, go with my chronic illness rider. If, however, you would like more benefit, you would like a dollar for dollar benefit, and you would like to know exactly what you would have available, go with my LTC rider. We also have cool features like these care coordinator services. So we built this on our standalone product, and we now make it available on our LTC rider, where we have licensed healthcare professionals that are there and available to your clients when they are at that time where they need to take these type of benefits. It can be confusing. People aren't doing well. And these folks are licensed healthcare professionals that are put in place to help your clients maximize their benefits. Again, 1%, 2%, or 4%, typical with these type of LTC riders that you can choose on the IUL illustration, and you can get up to $50,000 benefit per month on the LTC rider. So, you know, if you look at the chronic illness coverage, we get you what the IRS deems tax-free. It's about 11 grand a month right now. So you can certainly get a whole lot more out of the true LTC rider. But again, you will be paying upfront for it. It's about 10% of the cost. And you will be paying whether you use it or not. Whereas with the chronic illness coverage, you aren't paying at all, but there is a back-end discount. So you would have to take some of the death benefit away if you were going to use it. So again, there are upfront costs, no discount on the back end. The COI rates are guaranteed. And once you start utilizing the LTC benefit, we waive the cost of the LTC rider. So your premiums would drop about 10%. We make this rider available all the way up to age 79. You can get it all the way up to table 4. But if there's any flat extras, we're not going to make it available. So just keep that in mind. There are 4 different underwriting classes that you will get. And remember, it's different underwriting. So with life insurance, you look at the mortality underwriting. With LTC, you're looking at morbidity, chance of getting sick. So there will be a separate offer for the LTC rider. And then the best and most unique feature in the LTC rider space is that if you get declined for LTC rider but are still insurable for the life insurance, we will go ahead and put the chronic illness rider right back on that policy for you. You will not have to request it. You don't have to resubmit an application. You just need to explain to the client that they got declined for the LTC rider, but they will still get a chronic illness rider for similar coverage. Okay, if you want some more information on our LTC rider or some marketing material, go check out our microsite here. And one of the coolest things, aside from the sales ideas and some PDF presentation material, we have this cost of care calculator. Now, these are very, very helpful if you have a client who's kind of skeptical and doesn't know if he wants to get on board with paying 10% more on his IUL coverage. Show them what a projection of healthcare costs in their state are going to be in about 20 years. And after they have that quick heart attack because of the cost, they will then probably go ahead and buy that LTC rider from you. So anyhow, that can be found again on this microsite. Super, super helpful. That, folks, is basically what we have for you today. Al or Sarah, were there any questions from the field?
Can you hear me now, Bill?
Yes.
Okay, good. As my kids always tell me, my engineering skills with electronics is elementary at best. So I finally got on though. So I don't know what I did, but I appreciate that. You may have mentioned this early on, Bill, but this product uses age current pricing.
Yes, that's exactly right. We're one of the, I think it's just us and Prudential now that LBL's gone, use actual age or current age pricing. Exactly.
So what that means is that about 50% of the time, you're going to have a client that's going to be younger than the other carriers. So
Exactly.
if I run this product versus some of the other standard bearers out in the industry with this Protection IUL product, at the same age, United of Omaha is going to be right there at the top, if not the best. Then you take into fact that about half the time, United of Omaha is going to be a year younger. That just increases the difference in the pricing. So that's an awesome feature and something that I think maybe is not as understood as the value of it isn't as understood as it could be. So
yeah, absolutely, Al. I appreciate you bringing that up because I definitely skipped over that. But yeah, half the time your clients are gonna save even more money with Mutual of Omaha because of that age advantage. So that's a great point.
Then I think the added benefit of that chronic illness rider, it's not that we're promoting you bring your people with some health issues like MS or something like that, but if we can get them underwritten for that life side, that chronic illness rider, someone with MS or some other issues like that, they're never going to get a long-term care benefit or a chronic illness rider. This what's on there. It's added as long as as they get underwritten for the life insurance. So you've got clients that have some issues that maybe the life insurance is secondary to them, but that benefit for the chronic illness is something that's going to be huge for them. That's going to I think a lot of times just make that sale for you.
Yeah, Al, you're absolutely right. Just keep in mind, folks, our chronic illness rider, no underwriting and no upfront cost on that. So you're only going to have to pay for it if you're going to utilize the benefit, and it doesn't come out of your pocket. It comes out of the death benefit. And so there would be a small actuarial cost when utilizing it. So if you wanted to say take $80,000 out of the policy, maybe you have to drop the death benefit by $100,000, something along those lines. And that calculation is pretty easy and straightforward. We use an actuarial discount of 4.5%. We take the amount of money that you're looking to accelerate, and then we look at your life expectancy at the time of claim.
Perfect. Maybe just touch on underwriting. United of Omaha, I've been working with them for 20 some years. Back in the day, they were kind of the place we went when you had someone that was unhealthy, because they were extremely aggressive on underwriting. I think that's probably not as much the case anymore, because you don't want to be that carrier that's looking for the really sick people. But from an underwriting perspective, you guys are very aggressive. Very fair. And is there anything issue-wise? Are you good with cancer, cardiac, diabetics, anything special there you guys kind of shine above normal?
Yeah, I believe we're pretty good with diabetics. We also have what we call our FIT crediting program, yes, which it's not a table shave per se, but it is a crediting program that's extraordinarily easy to qualify for. In fact, I think it's like over 85% of your clients are going to qualify to get, a little bit of a decrease on the rating. Now, it ranges from a table 4 up to a standard. So your clients can get up to a 2-table bump. So if your table 4s can get up to a table 2, your table 2 can bump all the way up to standard. And I've been trying to get our chief underwriter to bump that up to preferred, but I haven't had luck yet. But it works not only on our permanent products like the IUL, but also on our term products. So it is super, super helpful and a great way to get your lightly rated clients slightly cheaper insurance. I see on the chat that someone was asking if we've ever increased the COIs on our in-force book of business. And the answer to that is no. We've never tweaked around with COIs at all. So we are a very conservative company. We don't put ourselves out there to try to bring policies in. So in other words, like in the IUL business, a lot of carriers come out with caps that are not sustainable. And that's because they're trying to rake in a bunch of business and then, do whatever they're going to do after the book business is on the books. We don't view it that way. We're a mutual company. We're very conservative. We are not going to put out caps or anything that we do not feel is sustainable. We're owned by our policyholders, and it's just one of the benefits of working with a mutual company.
Perfect. I think that's all the questions out there. Appreciate you doing this, Bill. It's very, very informative. The kind of one of the reasons we asked Bill to put this on was that recent announcement with the extension of guarantees going to age 90. To me, that was when I give quotes out to an agent, especially the agent that might be a little more conservative or have the clients that are a little more conservative and they like that guaranteed UL. I want guarantees. Okay, that's great. But if I can show you a product like this, it's got cash value in it, it's got the living benefits in it, and it's still guaranteed to 90, worst case scenario. And then you top on the grow rider, so get your money back down the road. That makes a convert out of a lot of those people that were those strong proponents of guaranteed UL. In addition, this product is going to be 10 to 15% lower cost than those guaranteed ULs. So strong guarantees, awesome living benefits, the grow rider, and cash value down the road. I mean, it's a package that just makes a lot of sense. So don't be hesitant to look at those if you got those clients that are that they want the full guarantee. This product is going to probably win over 90% of those clients that have that hesitancy and want the full guarantee at the end of the day. So
one last little point, guys. The guaranteed refund option, while you're typically not going to need to utilize that, it changes the way that you need to frame the conversation of worst case scenario with an IUL. If you underfund these things and the market doesn't go your way, IULs can disappear on your clients. And with the guaranteed refund option, you are guaranteed to be able to take your money back. If, for whatever reason, if you don't need the coverage, if the market you don't like the market performance, whatever, take all your money back after 20 years. And, you just lose the time value of money as opposed to, all your money being gone. So it's a great point. And, for your clients who are a little hesitant with market risk, it can be a game changer.
Yep. Awesome. Appreciate it, Bill.
Thanks so much, Al, and thanks everybody for showing up today. Really appreciate the time. Hope you guys have a great afternoon.
Thanks. Give us a call. Our office number is 800-747-5612, and we'll love to show you some numbers on this product. Appreciate it.